have on our hands. Saurabh Mukherjea is founder at Marcellus Investment Managers. He's joining us on the show. It's been a while, Saurabh. Great to have you with us here, and I dare say perhaps apt that you're back with us on a day like today. So huge swoon and then, big recovery. Just wanted to know your thoughts on, the markets from here. First of all, contextualize where we are in terms of valuations, etc. And how are you thinking about the way forward?
Morning, Prashant. Can you hear me, Prashant?
I can hear you. Saurabh. Go on.
Fantastic. So great to be back. And look, I mean, we've always been telling our clients through the last month of mayhem that just keep calm through this. Events like war are seldom long-term disruptors of the market. We're in a strong economic recovery. The discussions we've had with the investee companies over the last month, the channel checks that we've done over the last month suggest that the economy has picked up very, very strongly in the last 6 weeks. I would say this is a red-hot economy, and with corporate earnings going great guns. With the political scenario that we see playing out today, which will keep all the political parties interested. I thought this morning's results so far suggest this is the ideal scenario for investors. All the political parties will stay interested in pushing the reform agenda and doing the right thing. This is an ideal setup for long-term investors. Economic recovery, reasonable valuations, and at the same time, the polity on its toes. On the economic reform front, we should be looking forward to 2 to 3 years of solid earnings, and at the same time, for those who felt that they missed out last year, this is a great time to join the economic recovery bandwagon and make money. So mouth-watering situation for us. We have done some rebalancing over the last couple of weeks. We've bought plenty of Asian Paints over the last couple of weeks. We bought plenty of Dr. Lal Path Labs over the last couple of weeks, and we'll carry on buying great companies at reasonable prices.
Okay, well, the market is inching higher and higher, and the focus today is on the stocks which have seen the biggest decline: autos and ancillary stocks. Motherson Sumi, which has had a one-way decline, up 7%. Tata Motors is up 6%. Ashok Leyland is up 5%. Apollo Tyres is up 5%, and banks then after that. So Bandhan, IndusInd, Bank of Baroda, SBI, Axis, all of them doing well. 35,000 and holding on the Bank Nifty, and a couple of others stocks also doing well. India Cements is bouncing back. Bharti Airtel, which has been one of the strongest stocks, is doing well. India Mart is doing well. Pharma doing well. So a lot of these individual stocks right now are doing well in trade. Do we have Saurabh back with us? Okay, I think we're having some issue with Saurabh's feed. By the way, Coforge is another stock that we should have spoken about this morning. That's where I don't know if the block has already happened or not. Okay, the block has happened. I think that's where Baring was to sell the stake. Yes, the block happened, and it's a big block which happened on Coforge. And Baring, remember, is the promoter entity for Coforge, and it's a large block that we're talking about. 10% equity on that. Going out, so that's the one which is standing out. Anything else that you may have spotted, Sonia?
I think it's a Bank Nifty, right? I mean, 3.5% higher on the Bank Nifty right now. It's almost a 1,200-point gain, single-handedly leading the market. I guess it was single-handedly leading the fall as well, so there's a rebound there. Axis Bank, SBI, ICICI Bank. As we were discussing yesterday, some of these banks' valuations have come off quite a bit compared to where they were last year as well. So that makes it very attractive for perhaps a long-term investor to buy into these banks. So that's a pocket, apart from autos, that is looking very good this morning. And the mid-cap index, almost 470 points higher now. So a lot of individual pockets, specialty chemicals, mid-cap IT names, digital companies like Affle India, all looking very good at the moment. And of course, then the auto ancillaries.
Absolutely. And that's where the leads are. That's also looking quite good from the market point of view. If you look at UP, I mean, at the end of the day, while all states are important, UP is really the one, from the market point of view. Why is this election important is because, the route to Delhi is always via Uttar Pradesh in India, and that's where you have the highest number of Lok Sabha seats as well, of course. So that helps. If Mitesh is still with us, I think I okay. But looking at individual names, good going there, Prashant.
Oh, absolutely. I was just wondering, the Nifty's got 330 points, but is there any large heavyweight which is up 5, 6, 7%. There isn't. I mean, this seems to be a case of course, banks doing very well, as you guys have been pointing out, but also the fact that there is generally more everything up rather than anything really majorly down. I mean, except the ONGC, Coal India, Hindalco, Tata Steel, you basically have got 46 out of the 50 Nifty stocks which are higher. So it's a broad-based kind of a move higher. Banks, of course, are doing better than others because it's sharper reversals there after the fall. But it's not just one or two or three large heavyweights pulling their weight in a disproportionate way. That is not what's happening right now. Even, names like Bajaj Finserv, for example, Bajaj Finance, right? 3.5% in the green. Something like a lever is coming up, 3.5%, 2068. And of course, there is a fair bit of auto which is doing very well as well. I know it's a little early in the day to look at the breadth of the market, but if you want to do that, it's almost I think 17:1 in favor of advances, and large number of stocks which are jumping on the back of very, very strong volumes as well. I think we've got Mitesh Thakur with us. Mitesh, thanks for coming back on. So we've got the open. We're up 330 points. Any trades?
So Prashant, I think, one, we talked about the fact that around this levels of 16,650 plus, I would be inclined to take half the profits. I think you've done that. Now, trade your stop losses to about 16,530. And on the upside, revising the target to about 16,845, 850 on the upside. So I think eventually we'll head there. But the only thing is that last 10 hourly candles, if you see, right, the market has risen by about 1,000 points. So you always are in a dilemma that there could be some giveaway during the day. But I think overall, it's just a market which is definitely heading towards 16,850 and maybe beyond that. But we'll take that as the next target.
Okay, Mitesh, thanks a lot for coming back and addressing the market, which, by the way, is looking really good. Saurabh Mukherjea is back with us. Saurabh, morning. Sorry, we had that issue with connectivity. Saurabh, of course, you always look at market from individual stock point of view, and you've never believed in the large market sort of moves. What, to your mind, has become attractive again after the recent decline in terms of individual stocks?
Sure. I think the sector where the opportunity to me looks the most outsized is high quality lenders. If you look at Nifty banks, they're down 10% year on year. High quality banks are down 5% year on year. And yet you can see from both the RBI's data that's coming through and from the 3Q results, the third quarter results of high quality lenders, that good banks, good NBFCs are growing at 25%. Loan books are growing at 25%. The unlock, from what I've heard, the unlock is resulting in even stronger demand in credit dispersals. NPAs, the NPA issue, the COVID NPA issue is behind us. So high quality lenders, to my mind, is the most outsized opportunity for those out there who are fearing about fuel prices and input cost inflation. Hey, this is a sector where the raw material is money. The raw material is funding, and whilst funding costs could edge up because of interest rate hikes over the next couple of years, strong lenders in India have more than enough bargaining power to pass that on to their clients. So high quality lenders, we've got HDFC Bank, Kotak Bank. HDFC had a stellar run. HDFC Bank has a stellar run in terms of fundamentals over the last 3 years. The stock price hasn't kept up, and therefore we are aggressively buying high quality financials. There's two disclaimers. Obviously, we own plenty of HDFC, Kotak, Bajaj Finance, Aavas, Chola. We own plenty of it in Marcellus, and my family and I are large investors in Marcellus's funds.
Okay, got that. By the way, the high that we hit was 16,757, and now we're at 16,650. So it's getting a bit volatile for the market. Don't lose sight of that. The graph may not show it, but in the last 10-15 minutes, the market has sort of come off a little bit from the high that we saw. Saurabh, hi, good morning. You started by saying that in the last few weeks, you've been buying a lot of large cap names, whether it's Asian Paints or Dr. Lal PathLabs. Talking about these consumer companies like Asian Paints, raw material prices have escalated in a big way, right? Do you think that won't be such a problem as it could be an easy pass-through for these companies, and hence you're buying such names?
So absolutely, Sonia. So this has happened before, right? This is not new. We've had at least 4 instances in this century
where crude prices have tripled in the place of a couple of years. And in every single instance, Asian Paints' operating margin has held up nicely around the 20% mark. Moreover, not only does Asian Paints historically have a stellar track record of passing on input cost inflation onto the consumer base, what's helping Asian Paints, and I dare say it's helping Pidilite and Astral Poly, those are also holdings of ours. It's helping what's helping them is the recovery in demand. The last 6 weeks, I think January was, from what I understand from our channel check, January was a little soft. February and March have been roaring months for the building materials market. And so you have a buoyant demand environment, which makes it that much easier to pass on input cost inflation onto the customer base.
Just to stick with Asian Paints for a bit longer, Saurabh, the franchise, of course, is outstanding, absolutely no doubt about it. But how would you decide? This is a theoretical question. When would you decide that, maybe there is I need to maybe give this a bit of a relook? As I said, I just want to understand, would you ever do that or you won't?
Three sell triggers that have historically been relevant for us. One is governance issues. Second is capital allocation, suboptimal capital allocation by the management team. And third is challenges to the moat, right? Governance and capital allocation in Asian Paints, I don't think is an issue. Is there a challenge to the Asian Paints moat? We look at the competitive landscape very carefully. We keep our ear very close to the ground in terms of channel checks. We don't honestly see credible challengers emerging. There are lots of people who are going to have a go at the paint market. It's there's nothing wrong with that, but it's difficult to see a credible challenger out there. If you've seen the last 12 months of data, this company has gained more market share in the last 12 months than they did in the previous 5 years. So this sort of landscape, volatile crude prices, COVID, supply chain dislocations, is ideal for Asian Paints. And therefore, if we will keep our ear close to the ground, if a Grasim or a JSW Paints or a JK ends up mounting a credible challenge, we'll obviously take cognizance of that.
Okay, by the way, look at oil marketing companies now, especially HPCL. That's made a massive move all of a sudden, 6% higher on that. The other two are not participating as much. Perhaps they'll catch up. But HPCL is up 6.5% right now. IOC and BPCL are not doing as much. But as I said, market sometimes focus on one and then others join in. Saurabh, now, coming back to Indian market, what to your mind going forward is the biggest risk this year? Because last year was good for us, but last year the market had a lot of tailwinds going for it. The best being perhaps the ultra low interest rate environment. That's changing. Inflation is here, so that will have some market risk, right? Your thoughts?
So look, I think if you ask me, the outlook is even better than last year. Last year we honestly didn't quite know where we were going on COVID. This year, the economic recovery is on a strong footing. The country has learned through plenty of hard work on lots of people's part. India has learned how to deal with COVID, and if there are further waves, I'm sure the country will deal with it fairly adroitly. If you look at the last 70 years of data, Anuj, rising interest rates and rising inflation tend to be ideal combinations for a sustained bull market. So from an overall market perspective, I'm not that stressed. In fact, as I said, the macro outlook is the most buoyant I have seen in 13 years. Where you could have a degree of concern is, given everything that's panning out in Ukraine, and given that China and Russia are likely to forge a fairly close alliance over the next several years, I think India's defense spending is likely to go up. I think that will become a big theme of government spending in the several years to come, and India will have to realign itself away from Russia towards countries like Japan and America. From a fund flows perspective, I think foreign fund flows from Japan and America into India will accelerate over the next couple of years. If anything, that will put upward pressure, appreciationary pressure on the rupee, and I think that will necessitate central bank action to keep the rupee cheap, which in turn could mean that the RBI will have to keep the system very flush with liquidity, which in turn means high inflation. So a system flush with liquidity, strong fund flows into India, the Indian government spending on defense, and therefore overall an environment for CPI inflation perhaps pushes towards 10%. I think that's something we need to look at quite carefully. This means companies with pricing power, companies such as the ones we've discussed over the last 10 minutes, will do well, but weaker companies will fall away, and a high inflation environment will mean that weaker companies will struggle in our country.
Okay, thank you for explaining that to us. Saurabh, we've run out of time. Thanks a lot for joining us on the channel. By the way, the action is just hotting up on the election front.